Sanlam Global Best Ideas Fund has a mandate to deliver long-term capital growth by investing in global stocks that the fund regards as undervalued and neglected. The fund has delivered annual returns of 7.2% per annum in US dollar terms against its benchmark, the MSCI World Index, which delivered 5.7% over the same period. The fund is managed by Do Steenkamp and Kokkie Kooyman, and Kokkie is still in Cape Town to tell us where the fund has been investing. But before we get there, Warren, it's back to you.
That's right. Thanks, Barnon. We obviously, Kokkie's involved with a couple of funds, but this is the fund we wanted to talk about. It's got a mandate to effectively look around the world and find those undervalued and neglected stocks. As you can just see from this first slide here, Kokkie is the co-manager, and you can see his influence because financials of one sort or another account for about 50% of the fund, and the fund now has assets of about $500 million. Just to give you a perspective of where it's come from, if you had invested if you'd invested $10,000 in the fund a few years ago, it would now be close to about $12,500. So it has seen some appreciation post the global financial crisis. And when we look at the next slide, you can obviously see the damage done in 2008, and then the fund's returns from 2008 to 2013. Obviously 2013 is only the first 2 months to the end of February. So our first question for Kokkie is just to get a sense of where markets are at the moment and where he is finding opportunities to include shares in this portfolio.
Yeah, Warren, it's running a fund like we do is for us it's exciting, but it's very frustrating at times as well, because you seek value, but most value managers will tell you tend to buy too early, invest too early, and it takes a while for the market to see the value. So, at the moment, interesting, we find two pools of value. The one is in India, where specifically a lot of the banking shares, but a lot of other industrial shares are very undervalued. And the secondly is in the US on the technology side. India has actually really hurt us this year, and but India is the market. Once it turns, and I'm sure it will late in the year, it often just doubles. Then suddenly we look very good. But we've got the patience, and as it comes down at the moment, we're slowly accumulating. In the US, we've been quite a long-time holder of Microsoft, which hasn't done well to date. It's one of the cheapest shares, I would say, globally. And especially if you look at its dominant franchise and the cash generation. But a good example there is, we invested Hewlett Packard there, and Hewlett Packard first went down quite a bit and has almost doubled from the bottom, and we think it can double again. It's still on a P of about 6. So in fact it's below 6, and it's a dominant brand. It's not going to fall over. So those are the type of shares we look for. On the other extreme, we've got something in Hong Kong, Esprit. The ladies might know that it's fashion conscious, for the fashion conscious lady in specifically in Germany, UK, and also they're growing quite rapidly in China. But Esprit made a number of forays into the US specifically, where they lost money and had to close those down, and got in new management. But what attracted us to Esprit is its balance sheet is rock solid. Very good new guys that have come in from Invitex and other big international brands, and that's a thing that could also double. So the problem with a fund like this is if you look over the long term, it will do quite well, and that's our aim. But short term, it often is very volatile. And maybe just quickly, 2008 was something where we didn't shoot ourselves in the foot. That is just when the market dislocates that way, you'll find your shares that are not well known, really sell off. And we hope 2008 is a once in a 70-year event. And so
that leads exactly to my next question. I'm hoping that the market is not just about to dislocate again. Is there a significant chance of that happening, Kokkie, or is that not in your wildest dreams?
No. Well, short term, I think the market could react downwards simply because we've had such a strong market. But if you simply look at where interest rates are and what the large central banks, the ECB, the Fed and Japan are saying, where they'll keep interest rates, then the average dividend yield of the fund is about 4.5%. So, you're silly to sit with your money and deposits yielding 1.9% in the UK or in Europe, and you can earn a dividend yield of 4.5%, and over time the net asset value of the companies are still growing at 10% below that. So we think, sure, you have the risk at the moment of a bit of a correction, but if you look next 2-3 years, specifically the shares that we're looking at are just way too cheap.
Kokkie, I'm just intrigued to touch on that Indian story. Obviously, the African consumer and access to financial services has been a big topic here. But we also know that SIM, if I'm not mistaken, or Sanlam has opened an office in India, and we've seen FirstRand opening a branch there. Just colour for us what you're seeing there. Is the delivery of financial services to the Indian population happening as quickly as it is in Africa?
Yeah. India is a lot further evolved than Africa. I went to Nigeria last year. I'm on my way again, and I've been looking at a few other African banking markets. There's obviously already one massive difference. In India, you've got 1.1 billion people, but there's effectively one regulator, one governor, one currency, one country. Where in Africa, you'd mostly close to 1 billion people as well, but you'd spread over 50 plus countries, regulators, even languages. So, it's a lot more disjointed. Indian financial services market is actually really quite far developed. But what makes India exciting, you've got 800 million people who are still very poor, who are subsistence, but who simply are crying out for jobs to be created, and gradually that is going to happen. So as those people get jobs, and as you get manufacturing going and your economy deepening, then those people become future banking clients, and that's really why people like Sanlam and FirstRand who are there in India as well, and in fact ourselves, the shares that we're trying to find there will benefit from that.
Just wanted to touch on one other related aspect of in your financial portfolio. You've got a group called DGB Financial Group from South Korea. I wanted to find out what exactly. That's actually your 5th or 6th biggest holding in the fund at the moment, with 4.3% of the portfolio. Just tell us what the reason for inclusion is there.
It's I think the 5th or the 6th largest bank in South Korea. It's a brilliant bank. It's an old, traditional, plain commercial bank that takes deposits and lends very little in terms of trading, investment banking, fund management, and they've built up a really good reputation, really good management over a long period of time. We've been invested there for, I would say more than 6-7 years. The holding has varied. Korea is a bit of a nightmare country in terms of their government, and every now and then when government does something wrong, the shares sell off, the whole market sells off, and when that happens, normally we buy some more, and then when everybody gets excited again, we sell some. But it's a really good little bank, Daegu Bank. It's located in the province of Daegu, which is your main industrial manufacturing and your exporting hub.
Kokkie, just looking and going back to the Esprit story, when would you look to sell out of that stock? You've obviously got the metrics by which you measure it, but you hold it for a relatively long term. Talk us through the selling of it.
Yeah, it's interesting. When we compare our holdings of financial shares and our holding of industrial shares, financial shares tend to be quite volatile. I mean, you could have bought, and we did buy Barclays last year at 150, and we sold it way too early, on its way up to 230, and it went to 310, and now it's back at 280. But if you look at our industrial shares like Hewlett-Packard and Esprit, those things, we think Esprit could still double from here, and most probably it will. So obviously we keep on visiting management, and we've got a view as to what they should do to unlock the value. So every time we visit them, we make sure that they're still on track, they're doing the right things, and obviously we test that as they deliver their results. We do the financial modeling, and we test the reasons for them deviating from what they said they were going to do. But if this management team does what they said they're going to do, the share is significantly undervalued, and we wouldn't think of selling it before it doubles.
Kokkie, I just wanted
Sorry, and okay, what triggers that? Normally we've got a valuation in mind, and when it gets to that valuation, in our mind that is double from where it's now.
Kokkie, I'm getting the sense that Esprit and HP are in the same basket. They're both turnaround stories. Just with regards to HP, it's changed its business model quite a lot since I think it's Mark Hurd left the company under somewhat dubious circumstances. Is HP still a turnaround story at this point?
Yes, in fact, if I was an activist shareholder in the US, I would mostly sue the whole board in terms of the actions they took in terms of acquisitions and how they managed the business and the appointments they made. But Mrs. Ryan, who's taken over now, has certainly cleaned up quite a lot, has really refocused the business and had to take the hits from the acquisitions that her predecessors had made. So, is Hewlett-Packard a brilliant company? Is it, can you compare it to what Apple was under Steve Jobs? Not at all. But for the valuation, what it does is doing quite well. And we think, with the focus on cost cutting and getting back to what clients want, it certainly deserves a much better rating.
Kokkie, we were just looking at your geographical breakdown a moment ago and looking at your Asia exposure, which is above 30%. Do you see that being upped as a weighting within your overall Global Best Ideas fund going forward?
Yeah. It's the reason why the fund hasn't performed so well the last 6 months, because the market has really done well is the US. So your US stocks have done very well, and we've got, I think, about 26% exposure to the US. Very little of that is financial. That's largely companies like Microsoft, Hewlett-Packard, Deere. The Asian exposure is spread across Asia. It's a bit in Hong Kong, it's a bit in India, it's a bit in Indonesia, it's a bit in Thailand, and in Korea. Having said that, that sounds like it's a bit here, but there. It's very targeted in each case. In Indonesia, we've got an equivalent of a Capitec. In Thailand, in fact, it's not really Capitec, but something like that. They finance second-hand motor vehicles to people the banks generally don't want to lend to. India, there's a couple of government-controlled banks that are very cheap, and also in electricity supply. So we just think that if you compare the problems in Europe and Japan, and also to a certain extent the US, then Asia just has so much more growth over the next 10 years that we'd rather be there. There's much more certainty in terms of the dynamics. The only risk is that most people, when they go into Asia, they overpay. Now, in the past, we've made the mistake of going for things that were too cheap. But at the moment, we're focusing a lot on companies' long track records, but because they're smaller, they haven't really been recognized. And so you get the benefit of the growth, and you get the benefit of them re-rating.